Hello, it's Big Cheds, and this is the Trading Encyclopedia Daily Education series on my YouTube at Cheds Trading. You can find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about the concept of a swing high and a swing low, what it means, what the point of it is. So here is a couple images. We'll start here. This is an uptrend. We have the swing high, the swing low, swing high, swing low. And then here we have the uptrend and the downtrend. And in a downtrend, swing high, swing low, the whole point is essentially these are the major momentum turning points in a trend. Now, you need to identify a swing high and a swing low for something like a Fibonacci retracement or Fibonacci extension. I have those in other videos, but very simply, right? We'll take the Bitcoin chart. Let's go to the weekly chart. It's going to be easier to identify these levels. So here we have the swing low. Here's a swing high. Here is another swing high. Here's another swing low. So we have the price uptrending. Let's go back to the image. Swing high, swing low, swing high, swing low. Now, it really, beyond drawing Fibonacci extensions, there are other techniques that you want to, identify these swing highs and swing lows. But really, it's just identifying major turning points in the trend, right? When the price gets overextended like it did here, we stop and you pause to consolidate. The price gets overextended here, you stop, and you pause to consolidate. And, you just so happen to here, we found support at the weekly on May 50, for example, on Bitcoin. So it's understanding the whole idea with TA, again, is you're identifying a trend. You understand when it's strengthening and weakening. You want to understand when it changes from acceleration to consolidation. And so the terminology swing high, swing low is used to identify these major turning points in the trend. So now you essentially know what the term is. If you're not using fibs, if you're not, you don't necessarily need to exactly nail where the exact swing high and swing low is, but just in terms of marking up the trend and understanding what is going on here, right? In a downward channel, you have a series of lower highs, swing high, swing low, swing high, swing low. You say this would be the swing high after that, and then you set a new swing low, and then you set a swing high, a swing low. And that's the whole point, essentially, as the trend changes from the downward trend to the upward trend, and in this case, from the upward trend to the downward trend. So what does it mean, a swing high and a swing low? Really simply put, just the major turning points in the trend. And beyond that, if you're not using Fibonacci's, you don't necessarily need to exactly mark them, but they're just for a general idea of what the trend is doing and when it's consolidating. So swing high and swing low. And this is for the Trading Encyclopedia Daily Education series on my YouTube at Cheds Trading. Find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. Thank you, folks. I'll talk to you soon. Big Cheds out.